Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 16 weeks ago, I highlighted a bright pink July 24 to date rectangle pattern, currently 956 to 1098. This pattern is still operational and still looks good, even now. The top side for this pattern is also capped by the nearby 50% Fibonacci line of the May to August 24 move at 1098 and the 61.8% absolute Fibonacci line at 1106. Nearer term, the market over late April and early May had tried to stabilize over the November 2020 low at 1045 and looked for a while like it might try higher. But 3 weeks ago, prices pushed back down below it, pressing down through the medium moving average, currently at 1044, and the short medium moving average, currently 1048, as well as congestion at 1033. But, as I said 2 weeks ago, and I quote, "But further down is a slowly rising long moving average," and that's now highlighted in gold and currently at 1029. And I continued, "which I suspect may be the next level to be tested." End of quote. This turned out to be the case, and after only 2 sessions of testing, prices reverted back upwards over the November 2020 low, and last Friday making a quite brilliant combined bullish engulfing pattern and bullish closing white Mariposa that rallied, long white Mariposa that rallied up to fill in the small mid-May gap between 1071 to 1072. And up towards testing the May high at 1082. We are still up there, still trying to do this today. Now, a further feature, which you can see on my daily chart, is the dark blue, quite good looking, late December 24 to early April 25 bullish shift pitchfork. On this pattern, prices pushed up over the middle time, currently at 1075. Which was originally above, but on which the market is now trying to stabilize over. Additionally, there are 2 other somewhat related features that I would like you to be aware of, one of which I have mentioned before, and that's the previously mentioned one is the monthly key reversal up for April. Now, I had previously said, and I quote, "Whilst normally I would say to all things should be seen a shadow of this monthly pattern, including any attempts lower, but looking this far distant from April, well, I suspect we may see its force waning." End of quote. Well, this turned out not to be true, as this past week or so have reinforced the idea of this monthly key reversal up pattern. This leads me to the next new, potentially new pattern, and that is we are set up for a week and a bit to go of June, possibly becoming another monthly key reversal pattern. We are set up for this such that if on Monday the 30th of June, should prices close either over 1045 or under 1037, then we'll be on. Anything in between would have a lesser outside month pattern. Right now we're looking at a possible second monthly key reversal up, but please bear in mind that we still have more than a week to go till the end of June. Chicago soybean meal. 10 weeks ago, I linked the recent highs into a bright, breached and now possibly repaired downtrend. That's currently at 293.80. This also tied in nicely back then, well, for a while, with what was the descending long moving average, currently at 304.50. That had just about been shadowing the downtrend. More recently, the mauve medium moving average, currently at 301 even, had energized itself as a quite good resistance from mid-March until prices fell away lower late last week. In between the green short medium moving average, currently 297.50, which is it's just mixed in with prices, and I don't necessarily think that's on its own working as anything, but it could become a significant resistance if prices do rise. Now, 4 weeks ago we had a clear close over the bright red downtrend, and the last 3 and a bit weeks has seen the market trying to stabilize over this breached downtrend. Late last week prices gave up and we saw a plunge back down below the bright red breach downtrend And I quote, "The bears out there really relied on the overhead medium moving average in recent days to cap the market's rise. This breach on the upside, in my opinion, is yet, even now, as yet to be called a break higher, as I am not impressed with the show of any significant bullish incentive after the breach higher in trying to move even higher now." End of quote. So all this impinges actually on my thoughts from 12 weeks ago as to whether the whole action for this year has developed into a type of descending triangle pattern, now possibly even a descending wedge pattern. For the descending triangle pattern, we would use the bright red downtrend, top side as the upper trend line, and the 290 zone below as the base for the descending triangle. For the descending wedge pattern, which to be honest at the moment I do favour, we would use the early January to date purple lower trend line, currently at 284.60, as the lower trend line for that pattern. For the descending wedge pattern, with the original bright red downtrend still as the upper trend line. Now, as I've said for many weeks, and I quote, "For the future I think a lot will depend on any move down below 290 even, to verify if it will be a descending triangle or a descending wedge pattern, or on any true break above the seemingly resilient overhead mauve medium moving average. And ideally over the flatlining gold long moving average just above that for any significant move higher." End of quote. Now my major concern is the same as it has been now for 12 weeks here, and it is, as I warned back then and since, and I quote, "Possible false breaks here out of this proposed descending triangle pattern." End of quote. We can look at that attempt higher over the bright red downtrend during late May to mid-June as such a false break, as we are back within the descending wedge pattern and just below the descending triangle pattern idea. I should also point out once again that we are today once more within the previously highlighted 282 even to 300 congestion dating from between April to August 2020 and reprised back in August and November-December last year. Finally, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024 and also resonates now into 2025. And that is the annual key reversal seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted now for 106 weeks. Yes, a full 2 years plus. And I quote, "I now only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we've been living in the shadow of this pattern ever since. I've also added ever since, and that's the end of the quote, I've also added ever since, and I quote, there is only one thing you take away from any of my musings, let it have been those words. These last few weeks have shown that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market today." Chicago soybean oil. The main pattern here since November last year until this week had been the bright red shallow bullish shift pitchfork with the mid-September to late December 2024 move. However, on Friday of last week, prices moved up significantly with a counter to the counter bullish closing, long white Mariposa that gapped higher over the weekend past, clear over the now truly broken upper tine, currently at 51.65, and opened this week on the Monday with what ultimately turned out to be a bullish open and close long white Mariposa with a very interesting close. You see, for 2 weeks now, I have highlighted a new pattern as emerged over the last month or so, and one that I warned may kick off 3 weeks ago, and has actually done so since. I originally referred to it as the dark blue start of April to end of May ascending wedge pattern, and that's currently 49.16 to 55.72. As this had the requisite number of touches on each side. Now, I even laid out potential primary and secondary targets below for this pattern as late as 3 weeks ago. And even then, we had looked like a brilliant breach and break lower, dropping down through the significant 38.2% Fibonacci line of the March 20 to April 22 move at 48.95 and a short medium moving average currently 48.84, but halting on a closing basis by the combination of the bright red middle time, currently at 46.55, and the medium moving average, currently 46.99. Now, I even set up some targets, so both primary and secondary of this move lower, something I had earlier been hesitant in doing. In these, only the primary targets were reached before prices turned and tried sharply higher. Instead, what we saw was prices shoot up to the dark blue upper trend line of the ascending expanding wedge pattern. And this is where I have a quandary. You see, I had always maintained that the pattern developed was the one seen in dark blue on my daily chart. However, a larger yet still ascending expanding wedge pattern can now also be seen here with the same dark blue upper trend line, but with a somewhat lower and somewhat parallel and somewhat slightly sharper bright green trend line, currently at 46.45. Now, this doesn't make that much difference right now as we see prices testing the topside trend line. But if we break higher over it, a confirmed break higher, then it would make a difference as to where the target's topside might be for any such move higher. So for the moment, look to the dark blue rising upper trend line to provide some resistance above, followed by the 50% Fibonacci line of the old March 20 to April 22 move at 56.34, which is the gateway to congestion above from 36.34 up to 59.44 higher up, which becomes more separated out as we go higher still. However, if we do go that high, then I would feel obliged to lay out some targets for both the original ascending expanding wedge pattern as well as the larger newer one. So watch this space.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.